People think a bank collapse looks like chaos in the streets, but the scariest collapses are quiet. No alarms, no explosions. Just a screen that says, "Withdrawals are temporarily unavailable." You're watching Hidden Money History, where the past leaves receipts. Here's the uncomfortable truth. Most bank failures don't start with bad people. They start with a simple mismatch. Your money is liquid, the bank's assets are not. You deposit cash. But the bank doesn't store your cash in a vault. It turns deposits into loans, bonds, and long-term bets. That works until everyone wants cash at the same time. And when that moment comes, banks do the one thing you were told they'd never do. They lock the doors. This has happened for centuries. In the 1800s and early 1900s, bank runs were routine. A rumor spreads, a line forms, confidence evaporates. And once people believe the bank might not have the money, the bank definitely won't have the money. Because no bank keeps enough cash for everyone at once. Not then, not now. So governments tried to end panic with promises. Central banks became lenders of last resort. Deposit insurance was introduced. And for a while, people believed the problem was solved. Until a modern version hit, one that didn't look like an old-fashioned run. No crowds, no shouting, just withdrawals happening at the speed of a phone. And suddenly the system revealed its real rule. A bank is stable, until confidence turns into an exit stampede. Then the lock happens in phases. First, limits. Only this much per day. Then, delays. Processing takes time. Then, freezes. Temporarily unavailable. And the public learns the lesson the hard way. Your bank balance is not cash. It's a claim. And in a crisis, claims can be denied. Here's why it feels like betrayal. Banks sell you safety, but they operate on confidence. So when confidence dies, you discover what the product really was. Trust. And trust can be suspended. Now the twist, the collapse nobody expects is rarely the collapse of a single bank. It's the collapse of a belief. I can access my money whenever I want. That belief is the foundation of modern life. Rent, salaries, bills, food, medicine. Break that belief, and the system doesn't just wobble. It changes how people behave. They hoard cash. They distrust institutions. They move to harder value, gold, dollars, assets, anything that feels real. And once that shift starts, it can outlive the crisis that caused it. So here's the question I want you to answer in the comments. If your bank limited withdrawals tomorrow, what would you do first? Pull cash? Move banks? Buy essentials? Or do nothing and hope it passes? Write your answer. Subscribe to Hidden Money History, because history doesn't repeat, but it does leave patterns. Now zoom out. Why do banks lock the doors instead of admitting the truth up front? Because the system is built on a promise it can't fully keep. Instant access for everyone, even though the money is invested long term. That gap is the hidden engine of banking profits, and it's also the hidden source of banking panic. Here's what's really happening under the hood. A bank might look rich on paper, its assets might be worth more than its liabilities, but if those assets can't be sold fast without huge losses, the bank can still die in a week. That's the difference between solvency and liquidity. And most people only learn that difference when the doors lock. In older eras, the trigger was fear in the street. In modern eras, the trigger can be math. Interest rates rise, bond values fall, loan defaults increase. A bank's safe assets suddenly aren't safe anymore. Then one headline hits. A few big depositors move first. And that's when the collapse accelerates. Digital withdrawals, instant transfers, mass exits. No crowds required. So the bank's only defense becomes time. Slow the outflow. Create friction. Buy hours. Buy days. Because if withdrawals keep flowing, the bank is forced to sell assets at the worst possible moment. Losses explode. Confidence dies completely. That's why the lock feels so sudden. But the weakness usually existed long before the announcement. And here's the most important point. When banks lock the doors, it's not just a bank story. It becomes a society story. Small businesses can't pay workers. Families can't access savings. Hospitals and suppliers face payment breakdowns. And trust in institutions takes a hit that lasts for years. So what's the real lesson? Not paranoia. Awareness. Understand the structure. Banks don't store money. They transform it, and that transformation only feels invisible as long as confidence holds. So I'll ask again, but sharper. Should a system that depends on confidence be allowed to sell itself as certainty? Yes or no? Drop your answer in the comments. Subscribe to Hidden Money History.